He's a sir. Yes. I get those confused. Lord and sir. Anyway, sir, what is going on with Prime Minister Sir Keir Starmer? He is in a world of mess, especially with the Epstein files and Mandelson. He's a lord, right? Is he still a lord?
He's a lord.
Is he still a lord? Or did he resign? Or can you resign?
You can't resign from a lordship. You are always called lord, but he's not going to use the term. And let me just quickly explain this, just in case people are interested. I'm sure people are interested. A sir technically means that you're a knight. It's not obviously a hereditary title. You do not sit in the House of Lords, which is the upper house of the British Parliament, but it is an honour. So it means that the King calls you sir, and everybody calls you sir. And in theory, as I said, you belong to one of the various orders of knighthood, the Order of the Thistle, the Order of the Bath, the Order of the British Empire. Now, amongst the British elite, there are lots of ones, all of these orders. There's some which are more prestigious than others. The Order of the Garter is the far and away the most prestigious. My understanding is that Keir Starmer got his knighthood, his position as a sir, because he was a civil servant, an official. He served as Director of Public Prosecutions, and he is Sir Keir Starmer, and I believe he belongs to the Order of the British Empire, in my jurisdictions and that, which is actually the lowest ranking one. A lord means that you are a member of the House of Lords, and there are hereditary lords who have inherited their titles, who are the aristocracy, and then there are the lords who are appointed such just for their lives only by the Prime Minister. Most of the hereditary peers, the hereditary lords, no longer sit in the House of Lords, but all of the appointed ones.
It's a lot of talk about lords. Lordy, one more minute. Whose strategy? Is it micro? It is. It's MicroStrategy. The cryptocurrency, Bitcoin, has fallen more than 45% from last year's record. And the intensifying sell-off has evaporated all the gains investors have made in it since Trump's second term. And it's taking Michael Saylor's famous Bitcoin treasury firm strategy along for the ride down, MSTR. Strategy shares tumbled 17% on Thursday. The company holds 713,000 Bitcoins with an average price of 76,000. Wow. Well, volatility isn't always the end of the world, but this company's premise sounded too good to be true. Sell new shares and debt and keep buying crypto. For a while, it worked as Bitcoin rose, even as scores of lesser latecomers turned into copycats, like GDC, the company that pioneered a new kind of perpetual motion money machine, skyrocketed over the last several years, rising almost 700% in 18 months from January 24 to the end of July 24. Investors willingly paid for Michael Saylor's firm a premium over the actual price of the digital currency, and the company that had amassed the largest corporate stockpile of Bitcoin was worth more than the Bitcoin it held. Now Bitcoin has fallen far below the average price at which it was purchased. The math was dumbfounding, but early investors made stupid money until they didn't. But don't bother conducting a welfare check on Saylor and Strategy. He appears fine. And I guess he's holding on. Other investors are panicking. Anyway, it goes on. It's interesting. Let's see where GDC is. It's up. It's a contrary indicator. Railtown is down half a penny at 26.92. Every day it's down, but it's also always flat as well. It's just an illusion. They want you to think it's always red. Finger 113 up 5 cents. GDC up 22 cents, 362. MTEN, I can't wait till that drops off. 166 down 5 cents. ZJYL 1449. That's not dollars. That's pennies. All right. So it's 2:18, Friday, February the 6th. Pretty sure that's somebody's birthday that I know. It might even be, is it Ronald Reagan's birthday? Ugh. All right. We have 17,691,253 shares of Railtown. 17,691,253. Of course, that's not audited, but that's pretty powerful. It's a pretty powerful number that you guys have. And if I had to hazard a guess, which if you've been following me for a while, you realize that I've been completely wrong on timing. But I don't think you're going to have to wait much longer to start seeing confirmation of the Railtown story show up in the price of the stock. If I had to guess, what is it, February 6th? Maybe March 6th, 2 to 6 weeks, 2 weeks to 6 weeks from now, I think you're going to start feeling like this long national nightmare of waiting and waiting and waiting is over. I don't know where you are in the country, but it's cold here in DC. So there is that. For some reason, I'm just lack of energy, but we'll get through this next. Couple of hours. I have some things to read, not much, so I'll go to your comments first. The Dow is up over 1,000, NASDAQ is up 400, and S&P is up 100. And as we discussed the other day, these pullbacks are just corrections or pullbacks, I guess, in this trend upward. As I said, I don't know, 2 days ago, I don't think it was the start of the big collapse. They don't warn you. You can't you can't find out that the market is going to collapse in the headlines. You just can't. And that's why when it starts doing better and everyone gets excited, that may be time to protect ourselves to the downside. Sorry, I'm just making a list of a couple of people I have to call. I've been on the phone and going to continue to be on the phone, trying to make things happen, trying to be an actor, act on others before they act on you. Did Lord Acton say that? No, there is nobody like such a person. All right, let's go to the top. Pete the Greek is number 1. Fast Eddie, number 2, good day. Nephew Steve picked up another 3,000. All right. Gotta write that down. That's the way to do it, Steve. 3,000 at 28. What a price. What a price. What a price. Solomon's Treasure. Hello, sir. Uncle Bill. That's what they used to call my dad, Uncle Bill. And there are a lot of people to call him Uncle Bill. His mother had a lot of grandchildren. My grandmother. I was the eldest. I still am, but she's not here anymore, so she doesn't have them. Hey, Chess King, what a great dog. Love that dog. Hey, Clay. Looks like we got some buyers around, but like Cam says, they are buying, then stepping away. And then when the shorts knock it down again, rinse and repeat. Yeah, but the pattern's better. Yes, but the key thing, I was talking to somebody today, I really want to emphasize, this is not a day trading stock. And in fact, it's not a trading stock, in my judgment. Yes, you're right. It has that volatility. Because they're in trouble. Or one definition is there's some of them in trouble. The second thing, they're just mining the market for a penny, half a penny, a quarter of a penny in volume. They get the right to sell stock that doesn't exist intraday. They get the right to lie on their tickets. They get the right to true it up at the end of the day and then report to the completely cuckoo and Wagner, oh, it was a bullish day. But they do it all day. They're just skimming, mining money off. And they call that a job. They think they're worth it. They think they're making a living. They're just thieves, just scum. But it goes on and on and on. Everybody fights it. Nobody understands that there will not be buy-ins. The only thing will change it is policy changes and a change of leadership, a commitment to enforcing not only the securities laws that have been on the books for almost 100 years, but the intent of those securities laws. But they can't do it any more than they can do it in the silver market. The banks, a bunch of cowboys, have leveraged the banking system. I wouldn't be surprised to find there's some banks out there 250 to 1. And they just can't rein it in. They've got to keep going. They're after Venezuela. They're after Iran. They're after Russia. Because those assets aren't in the collateral of the banking system. I sometimes wonder if the enormous inflating of AI is going to give room for the governments around the world to print trillions of dollars to create more collateral. I mean, it's an ever inflating con game. But what we own in our accounts is securities entitlements. The brokerage firms own the shares that you paid for, and then they create derivatives contracts and they create rehypothecation, but they're doing that with silver and gold and everything they can get their hands on because they deserve to get rich. In that world, day trading, the things Ham talks about, and I'm not criticizing it, I think he's right. But in Railtown, that's been happening, that walking it down, the constant heaviness, because I don't think shorting describes the entire campaign by these Confederates. But when Railtown goes up, believe it or not, they're not going to have the power to destroy Railtown. Why? Number one, there are no toxic financings out there. Number two, there's no huge hedge funds committed to taking the entire market cap. There are probably some day trading platforms and pools of hot money that might be in trouble, and they're moving it all around. But there's no dedicated Toad or no dedicated Polar trying to take it all. So those people will move on to easier pickings. Three, the reason Railtown is down, yes, they've walked it down, but it's also, there's no buyers. Now, there's people out there that say, well, if it were so good, they'd violate their NDAs. They'd violate their CAs. They'd violate their standstill agreements. They'd violate securities laws that say that if you've heard material, non-public information, and you're a hedge fund, you're an ETF, you're a portfolio manager, if you violate it, you can lose your job, you can lose your directorships, lose your house, lose your freedom. But there's people out there that say, oh, they'd be doing it anyway. I don't know. Some people do that in some stocks, obviously, but I don't know that it's true that people are going to gamble their entire life on one stock. There's plenty of stocks out there they can buy. And remember, they make their living as a percentage of the assets they're managing. And that's a nice living. They don't need to have a home run in Railtown to make a nice living. So why are they going to risk it to cheat? I don't think they are. So the buying is missing in Railtown. Now, when Railtown goes up, the buying all of a sudden is coming in. It can only mean one thing. The material non-public information has been released, and these buyers are released from their restrictions. It can mean, I guess, a second thing, that the visibility of the story, both in proof of concept and in results and in revenues, is screaming, and everyone wants to join in, and they say this should be the same as Langchain. Well, that buying's going to just take it up to $3, $5, $6, $7 a share, and it's not going to be shorted back down. They're going to try to test the naive. They're going to try to test the fearful. They're going to try to test the ones listening to Tony that, oh, that's a win, and all that. They're going to try, and people that have stop limit orders in. There'll be volatility, but Railtown is headed higher, in my judgment, and it'll stay there. So you don't want to be thinking per se with the training that Ham gives you on this stock. But Ham's training is very good if you once Railtown's $10 or $20 and you want to take a little sliver and play in all the hot stocks he talks about. It's good training for that. That's trading. It's not investing. That is trading. This is investing. Yes, it's a speculative investment. Yes, it's been under pressure, but the wind is going to be at its back. From the last days, the answers the computer gave, and of course, the computer's answers are probably skewed by the inputs. It's not a brain. It's just a fast-talking computer. But there is no competition to Railtown. There's no other end-to-end solution to put in the market they've chosen to go after, to put on top of AI data centers. There is no competition to Railtown. Of course they're going to catch up. And of course others do parts of it. But right now, to make Railtown equivalent to these other POS stocks, you're going to miss out on your way to make back the money you lost and to get a multiple in the green. You cannot think of Railtown as being GTII, Finger, CRTD, Vocal, MULN, MTEN, ZJYL, GDC. You cannot think of this stock being like that. This is a stock that should have been private, but lucky for us, it isn't. It should have been abused in the public markets, but lucky enough for us, it wasn't. And then, it's abused in price, but it wasn't abused in terms of signing a toxic convertible note. And it's all timing. It's all fortunate. The two guys got started early with their plans. They went public because they needed money. But in the middle of going public, ChatGPT came out, and all of a sudden awareness of AI exploded. And in the same timing, Rail Engine just now, but Rail Tracks and Conductor were well along, and they bought AIP, and they got this contract with TELUS. So they didn't have time, or a sixth sense told them not to sign a deal with Jeff Easton, Kurt Kramer, Ari Rubenstein, Ionic Ventures. They didn't do it. So the company went public because it was early on the AI space. No one knew what they were doing. They put their own money in. They put friends and family, early round angel investors, and then they needed to go public to raise some money. They did it in Canada, then they came here. So that opens them up to the onslaught of criminal activity. But the problem is your government and your banks and your investment banks and your funds, they're all in on it. They're all in on it. and the regulators. No one cares. So they crush it. But also fortuitously, they didn't sign a toxic note. So there's no fund out there that's going to be able to cheat without actually taking risk. They only cheat when they don't have any risk. So we're lucky it went public. We're lucky they didn't take any toxic financing. And I think we're doubly lucky that the price is essentially a seed round or a Series A round price. So we don't have to wait the 6 years. I know it's been a shitty 6 months, 7, 8 months, for some people over a year. But the fact is, a lot of people that put up money was over 6 years ago. We don't have to wait that long. Of course, it feels like we're waiting forever. And yes, Clay, as soon as it trades up on any of these days, they bring it down. The heaviness brings it down. And then we start thinking, oh, it's just like GTII. It's just like CRTD. It's just like, fill in the blank. Every stock you've heard from the Charm Boys. Pump it up, pump up the volume. It's like that song. We got to get up before we can go down. Was that James Brown? We got to get up before we can get down. I mean, it has a dirty message, but that's what they get it up, then they hammer it down. But in that environment, you got to do what Ham's telling you. But with Railtown, when it finally releases the news, finally the buyers who know can buy. Buyers who don't know now but will know can buy. And when the proof of concept kicks in, and it will be rapid, they can scale the revenue at that data center overnight. Overnight, they can go from 1 million users, which don't exist now, to 10,000 to 1 million to 10 million. They can go from 1 user. They got 3 users now, handful of users. It can happen overnight. And in the face of that, the stock goes up. If you're thinking, oh my gosh, this is another GTII, you're going to miss out on the real move. The move from 25 cents to $5 is just catching up with Langchain. That's unbelievable. That's 20x. And if you relay it to a trading mentality, hey, I got to book that. Or even peeling off a little bit, you're going to miss out that from $5, believe it or not, it could go to 50. Now, my caveat on 50 or higher even is, well, look, 50, if somebody were to buy Railtown for what IBM just paid for Confluent, it's $50. It's over $50. So if there's a bidding war, that could happen. But if Microsoft offers, let's say $7.50, I have no idea. I'm just making it up. I think the company would feel obliged to put it out for a vote. So I don't think that would go through. I think there'd be a bidding war, but if it were to be taken over at $7.50, making it up, the move from $7.50 to $55 might happen inside of Microsoft. So those are things we can't control. But what you can control is do not treat Railtown as if it's GTII. Do not treat Railtown as if you're buying calls in finger motion. Do not treat Railtown like you got your hot money in MTEN at 27 because billionaires are there, and now you see the price. It's not one of those. And I guess if I raise my voice, That's not very convincing argument, just raising my voice. But MTEN right now is it's shoot. Why doesn't the decimal work? There we go. It's less than a penny, MTEN. So if you were listening to all these breathless boys at 26, 22, 18, 14, yeah, you got to use what Ham says. You got to get the F out of it. Of course, I don't know if he recommended buying MTN or not. I don't know. Somebody did. But Railtown's not that. MTN is puffery. ZGYL is puffery. GTII is not only puffery, it's been puffed. Railtown is not puffery. And you're going to regret it if you treat your stock in Railtown like, oh my gosh, I've got 20x on it. It's gone from 25 cents to $5 and I better get out, take some money off. You're going to be sitting there feeling foolish. It's more likely that you'll see it go to maybe $1.25 and the heaviness will still be working in those low numbers because a lot of the institutions can't buy under $2, under $3, under $4, under $5. So they'll still have some volatility because they're trapped. They'll have flash crashes like they just did in silver, just to shake you out. And if you follow that, you're going to get shaken out. Railtown is not MTEN. It is not GDC. It is not G-Bucks. Railtown is not a hot money trade. In fact, I was talking to somebody today, and I stand by, even though Tony, the terrible tiger, and the timid turtle, and his partner, Platinum Blonde, make fun of me. Fine. I think Railtown's a one decision stock. Maybe next quarter, Microsoft announces a friendly takeover and they're willing to pay $5 a share plus $1 in cash, $2 in cash. And everyone says, hey, we got to take it. But along comes Oracle, says we'll pay $7.50 and $5 in cash. And along comes Amazon and says, we're not going to let it happen. We'll give you $25 in stock. And by this time, Microsoft says, we can't let Amazon have it. TELUS comes in but drops out because they can't afford it. And all of a sudden, it's a one decision stock. But I wouldn't expect someone with as little experience as the Platinum Blonde, or someone probably with limited experience who has been pounding the table on AME and GMC for 3 or 4 years. I wouldn't expect them to understand it, but I want you to understand what I'm saying. Railtown is not one of these POS stocks. It's behaved like one. You got me there. It certainly has behaved like one. But the story isn't over. The story isn't over. And you're going to be astonished. You don't want to be shaken out. That as it goes up, if you follow day trading rules, you'll take money off the table. You'll miss out with that money. If your heart can't take, which I understand, volatility, you might get shaken out. But if you can just stay the course, let's say by I don't know, by May. They might be optimistic, making it up. Microsoft wins the bidding war at $17.50 a share in stock and $2.50 in cash, and you don't have to do anything. You just let it get bought out. And you don't have to pay taxes until you sell Microsoft. I don't know. I'm creating a scenario that is completely speculation. We don't know. But it's far more likely to happen that way, and to happen very quickly, than you're going to be able to get in and out day trading Railtown. And Platinum Blonde and her timid turtle are completely wrong. There may become a time that you get out and you may not be able to buy back in. But wait, I thought it's a stock market. If you sell, you can buy back. And Tony, yeah, right? Well, if you sell 100,000 shares as it at 3, because the heaviness is still around, and you try to buy it back at 2.5, but you miss it because it only pulls back to 280, and the next move is to 430 and then to $6, and the hypothecators and rehypothecators take back their lines of credit, and maybe a Mavericks comes in to start buying. There might only be 10,000 shares a day trading after the computerized mimeographing stops. I can't make up a hypothetical that's going to be accurate, but that could happen. So just please, until we know something, there's no reason to sell Railtown. None. Now if it goes to 80 cents, they'll pull it back to 6. If it goes to 40, they'll try to bring it back to the low 30s. If it busts out 50, 60, they'll try to bring it back to 45. If it busts through 60, 70, goes to 80, they'll try to bring it back. If it busts through $1, goes to $1.20, they'll try to break it back. There's going to be volatility. Ignore it. Unless we learn something else, but we don't know any bad yet. Ignore it. As it walks up, crabs up to $1, back down. Up to $2, back down. Up to $3, back down. Up to $4, back down. Up to $5, back down. Do not sell. Do not be shaken out. Once it crosses 5, 6, it could go to 750, 10, 250, 1250 in a day. Now, Tony ridiculed me for that. I think I said $15. And he ridiculed me. But he's the mature one. I'm the immature one. But that's what could happen. And if you're day trading, you're going to miss out. So don't do it. A buyout could come when it's 12:50. You could go to sleep one night, wake up the next morning, and Ward Richardson has put out a post to me, and I put it up here, and all of a sudden Railtown receives a buyout offer. And then there's a countervailing bid. Now that may not happen, but I believe it will. I do not believe there's a better product on the market than Railtown's. But it could be wrong. But it also doesn't matter. There's plenty of room for all of them. Look, they're not pricing Langchain at $1.5 billion, $2 billion next round. That's my guess, because they think it's going to go down. They're going to try to sell it for $10 billion, $20 billion, $30 billion in one of their portfolio companies like Amazon. Well, if Railtown gets an offer at 11 or 12 billion, it's a $60 stock. And that can happen overnight. And if you're trying to day trade it because the timid turtle is trying to get you interested in AME all over again, you're going to miss out. Please, please. And I know raising my voice is not the best salesmanship. But you are correct, Clay. It is a pattern in this walking it down. And it could continue until the buyers are allowed to buy and the stock price is over $5, believe it or not. Because then institutions and retail can buy the stock. Below it, there's all these restrictions. They are playing with the advantages down here. Just ride it out. Be tough. Be tough. Play chicken with those bastards. We'll see. There are people out there, I think, that have questioned my sanity and my stubbornness. But I have tried to see where Railtown is going to go to zero. And I just don't see it. I've tried to see where Railtown is going to get buried here in some sort of toxic avalanche of endless selling. I just don't see it. It is experiencing a, probably 9 months, 10 months, 12 months, 13 months of that kind of selling. But I don't see it as lasting forever. Yes, it's been painful, but I don't see it as lasting forever. And then I try to see, is AI a huge mistake, a huge bubble, and that people like Railtown, who started early, by the way, Langchain came on relatively late to the game, but now it looks 3 years ago, sounds like a long time. But if if all these people that have committed hundreds of billions of dollars in CapEx were to stop, would the demand for Railtown go away? I don't think so. I don't think so. If all these people moving forward got scared and said, we better stop, can they stop? Can they stop? This is a battle to the finish line amongst these 7 or 8 or 9 companies. And in that world where they have to win, is Railtown going to fail? I don't think so. I've tried to look at it from every angle, other than the one thing I refuse to do, which a lot of people will not join me in. I refuse to look at that stock price and tell myself that that stock price is telling me something other than the heaviness continues their daily strip mining. I refuse to believe that the market knows something I don't know. I will readily admit that whatever I thought I knew has not proven to be correct, certainly in terms of timing. So I'm not claiming that I have perfect information, not by a long shot. But I'll tell you what, that market is not telling you that Railtown is a GTII. It is not telling you that Railtown is an MTEN. It is not telling you that Railtown is a ZJYL or an HPIL or a Venue or a Genius Brands. It's not telling you that. And if you feel that this price, now the price action makes you sick to your stomach. And you're right, Clay, it has those patterns. But if you then make the leap that, oh, Railtown's just like the other stocks, I better take my profit and I'll wait for the next entry point in one of Frank Benedetto's stories, you'll end up buying MTEN at 22 and losing everything. Without criticizing Frank or Dan, they don't know any better. These are not geniuses. These are just lugheads that used to be on trading desks, and they don't mind calling CEOs and sucking you in as long because they got family stories. It's just time to get away from it all. Railtown's your way out. And if you treat Railtown like it's the same as these other stocks, you're going to miss out on the escape. You're not going to feel good about it. Now, our job here is to stay attuned. And if there's something that happens that shows that story's not working out, well, then we have to adjust for it. But at $5, it's line chain. At $55, it's Confluent. Everything in between is open for negotiation. But I love your analysis, Clay, that it's getting better. I think it is. It's essentially 27 cents now. Last week it was 25 cents. Of course, it's always red because they always print it. They always print it on the red. But I agree with you. It is getting better. DMAC. Hello, William. Patience is a virtue. Our time will come. Thanks for all you do for our community. Well, thank you, DMAC. I know that I don't have the perfect personality for this, and I piss some people off. I really don't mean to. I was telling somebody today, I don't know, it's like a Rorsch test. You know, when you talk for an hour or 4 hours, your conversation goes ways that you never would in a half hour or 15 minute conversation. So sometimes I overstep or misspeak, and I wish I really don't mean to hurt anybody. Another guy pointed out to me that lots of times I'm kind to the shills and mean to investors asking a question. And I think his criticism is right. But I don't always know when I start. I start to get an impression as I look at their questions. So anyway, I know I'm not perfect by a country mile, but I do appreciate your comments, DMAC. Chess King. I picked, all right, Chess King. Wow, I think you're either tied with Donna or you're ahead of her. But I think she might be ahead of you because she was going to put more in. I don't know. I don't know. I haven't heard from her in a while. 117, 670. That's awesome, Chess King. Awesome. Giuseppe. I was especially interested in the price decay. Seems like a nothing event. Yeah, the gentleman who bought, I think it was Eric, but I don't remember, who brought up the warrants. This expiry date was a small amount. The biggest amount of warrants that are going to expire, I think, is February 26th or maybe 28th. And so it's probably going to have more of an impact then. But I really don't buy that the selling of stock to exercise, 300,000 or 400,000 warrants is the explanation for the constant pressures. I think somebody's in trouble, and I hope to heck I'm wrong, because I do not want to see a short squeeze. Then I can't keep control of all of you guys. You guys are going to be listening to all of the charm boys, and your assets are going to be dispersed across every POS hype story out there. I mean, do you see that GDC, oh, well, we're going to put crypto in our treasury, just like Saylor did. Well, it's just buzz. It's just buzz, buzz, buzz. Hey, Joe Marty, good afternoon. Pat M, good afternoon, William and all. Hey, Clay. Yeah, Clay, I always do that. I wasn't only talking to you. Another gentleman today asked me the same question. And so I was really talking to a broader group. The problem is, and I've said for a long time, if you want to make money with ham stories, buy in early and follow his advice on how to get out. Just do it. You'll let somebody else wait for 5,000 a share. But in other words, let him pump it, you dump it. Because they can't get you for dumping it because you didn't pump it. So that works. But with Railtown, so many here, and Clay, I really didn't mean, I know it came across that way. I really didn't mean it to be directed at you. It was this overall frustration because I had the conversation earlier today, is we've all, and me too, I lost in MMTLP. I lost in Logic. I lost in GTII. Lost in Finger. I'm sure I'm leaving somebody out. And so if I were trading, if someone convinced me to buy ZJYL right now at 14 cents and it suddenly went to $3 or $4, I'd be thinking that way. Oh, I better get my money out because it could collapse again. But I just really, that's how our raw nerve endings are. But I'm just trying, a lot of my voice is frustration. And a lot of people don't see what I see with Railtown, I guess, too, which isn't to say that I'm correct. I think I am. I wouldn't be saying it otherwise. But so, Clay, I wasn't really addressing, even though the word is you for one and for all. And yeah, I didn't mean it. Your question made me think of it, but you gave a very positive question. It's just what I know a lot of people are going to do, and they're going to be susceptible to Tony coming and saying, well, a win's a win, and you got to take some money off the table and diversify. Have you looked at AME lately? It's got a huge short position, whatever the hell the pitch is. Or you'll get a cigarette tinged, breathless pitch from Frank Benedetto. Well, you got to get into this. I got all my people in it, and it's gone right. Well, those you do treat that way. This one, though, if you get out, I just think you're gonna regret it. Now, Clay, the thing is, will there be chances to trade it? There already was. And my advice caused you to miss that. People could have traded it from 60 cents back down to 40. And in fact, a pretty intuitive guy with a lot of experience trading, I believe, called it that it was going to break down at around 44 cents. And he was right. I was wrong. And there was a trade there. Let it go at 44 cents. Let it run down to 26 cents or 25 cents and get back in. That's a hell of a trade. But I think for me anyway, that trade is a lot more clear in the rearview mirror. It now seems obvious to me, but I didn't know it then. It now seems obvious to me that whatever's going on with TELUS and the data center and the hookup between the two companies and Rail Engine, that was what they were waiting for. So all this urgency that I was hearing about was probably misplaced, but I didn't know that at that time. So to me, trying to trade, getting out like a hot trader, although like I say, I give this guy great credit. He called it. You get out at, like 44, get back in at 28 or something. Nice trade. But for me, it was more than likely, the next week you could open up your screen and the stock's at $1.20. It didn't happen, but the probabilities, the risk is at least a flip of a coin, but probably much higher that something good would happen. But Clay, in retrospect, I think whatever's going on with TELUS and Rail Engine, it seems so obvious now that it was going to at least take till the end of January. I knew, and I warned everyone that tax loss selling and the holidays, and I knew that chunk of dead time was coming. But yeah, I didn't call it right. There was a trade there. I just still think it would have been so risky to get out. Like Brandon's friend got out, had a stop order at 25 cents, 50,000 shares. I bet that guy never got back in. It's now 28 cents. Got out at 25. He's never back in. And that's the kind of thing that I'm talking about. He may think he can find another stock that's going to give him 20 or 25x simply because the story is told and the preliminary indications cause the stock to go to its comparable value like Langchain. And then from that point, as revenue and proof of concept comes in, you could get another 10x. It's just, people are going to regret treating it like one of these other stocks. How do you make your money back on MTEN? How do you make your money back in ZJYL? How do you make your money back in GDC? That's probably going to go lower. How do you make your money back in Finger? For Finger to go back to the recent high, the $9 high, it's got to go up 900%. It's got to go up 9x. Stocks don't normally do that. For MTEN, good Lord, if you say it's at a penny, first it's got to go up 27x to 27 pennies. Then it's got to go up 10x to 270. Then it's got to go up 10x more to get to $27. These are just unbelievably impossible odds. And Railtown is sitting here because we know what the other side of the market does, because the buyers aren't there. Now, some people disagree with me on that theory, but I think it's obvious. The buyers aren't there that know the story. There's a lot of buyers that don't know the story. The stock's under $1, so it doesn't fit the first checkbox of any institution, and there's no revenue, there's no proof of concept, but you and I know they have a deal with TELUS. They've announced it. We're paying attention. There's something like 500 successful in the market AI companies. These institutions can't follow every new one, and they don't care to. They don't care to. They don't try to get in at 25 cents. They'd rather pay $8 and it's on its way to $30. They keep their job. So that's where we can, build our understanding, build our positions, have our information, and act. And the price we pay is just what happened. Williams wrong for bloody 8 months at least. It's gone from, now it's in the red. Now it's in the red. They always do the same thing. I bet it's 52.5 on the ask, 55,000 on the ask. Where's all the selling coming from? It's all fake. So we can use our knowledge to have a win. And I don't want people to dilute that win. Now, in the case of a short squeeze, I hope it doesn't happen. Or in the case that the stock, I'll give you an example, Clay. What if Microsoft wins a friendly bid, not a hostile bidding, but let's say they win a friendly bid, and I'm making it up. They offer $10 a share in Microsoft stock. It might not be that high, and $2.50 in cash, and they win. Well, let's say the stock goes to $11, and you think, I think, I'm not using you as Clay, I'm using an investor thinks that, well, it's $11, Microsoft's going to pay me $10, and I'm getting $2.50 in cash. So if I sell it here, I'm locking in a certainty. Sure, I'm giving up 1.5 points on the upside, but I'm locking it in. Well, one thing is you're also locking in a taxable event. But what if Microsoft doesn't want to own the AIP network, for example? They don't have the man or woman power to throw at it. So they say, sure, that's our deal, but we're not interested in AIP. So the company says, well, we'll sell that to Constellation Software, who is the model for the AIP network, and they're all software as a solution instead of AI software as a solution. So maybe they buy it, but that's not calculated in that the stock's trading at 11. Microsoft's paying $10 a share in stock and $2.50 in cash. So when you say, well, I'm just going to take that because it's certain, what's not calculated in there, who knows? Maybe there was discussions behind the scenes that hasn't been disclosed yet. And maybe there's also going to be a $5 per share issuance of Constellation Software. So the total is $17.50. And if you sell in that environment, you might miss out on that. So look, I made up the example. It's all hogwash. But the idea of it is what could happen. And that's just why I just, and Clay, you didn't even ask about that. So I don't know why your question got me thinking about it. It's probably the gentleman I talked to earlier today. I would like you guys to keep as many of these shares as long as you can. And I've told some people, I'm going to try to set up a way that you can keep that. But make no mistake about it. Once this is a couple of $100 million, every CEO that's ever been on space calls with you is going to try to take this money. That drum major, Genius Brands, with the dyed hair and the pompous British accent, he's going to try to take your money. Dan Borders is going to have the next idea, and he'll try to take your money. Frank Benedetto, he's going to have 2 ideas. And Ham, respectfully, will probably come in with Finger again and some other little enticing story. Tony, the Tigger, he's going to come with something. And so, and if you sell too early, your emotions are going to get you chasing the next Firefly. So anyway, those are all my, I guess, Clay, I have a hard time explaining it. I just don't want people shaken out. And you've never seen, if I'm correct about Railtown, you've never seen it before. You've just never seen it before. And I would argue, particularly for a guy my age, I'll never see it again. But it doesn't mean I'm correct. So you're not you, Clay. I guess the collective idea that it makes sense to take some money off the table. Everybody's got to do that differently, and certainly to know that you can pay your next 2 years of bills without sweat is important. But the opportunity cost of doing that too early might be extraordinarily high here. And I know, Clay, you didn't say that you were, wow, Railtown is asking $29.46. Not anymore, it isn't. Not anymore, it isn't. It's so weird, Clay. The volume in the United States, 17,400. I wonder what it is up in Canada. All right, allow all cookies. Yeah, look at that. 230,000 in Canada. It's like the heaviness has moved away from the United States. They've gone on to other pastures, but up in Canada, I wonder if it's ongoing mining of the markets, or if it's a scramble to cross shares and move it to, relationships with prime brokers they don't mind blowing up. I don't know. But the volume is really high in Canada. If these were normal markets, it's such a good sign to see this volume at the lows. It means that a buyer is absorbing everything for sale, and whoever's tired of the story, whoever's giving up, is getting out. And when you get to that last sale, it snaps back. But unfortunately, a lot of this is just computerized selling of non-existent shares. And your regulators, your Congress women and men, and your president says it's okay. They know about it. They know about it. All right, what else did Clay say? Just pointing out that the other side seems to be having trouble holding it down. I agree with you. And clearly, the volume in the United States, I think being low proves your point. Let me go back. In Canada, the volume is 230,736 shares. The bid, 56,000 shares. In the United States, the volume is 17,400 and the bid's 10,000 shares. I agree with you, Clay. I think they're going to have a hard time. It looks like this will be a 30-cent stock next week. The ask is $29.46. Will the bid be above 30 cents next week? That's the question. I think you have a good observation, Clay. The stock may be down just in relation to the Canadian Stock Exchange, but there's not a lot of volume holding it down. And so you may be right. Maybe they've turned off the stock loan department, stock loan desks has turned off the endless availability of shares. I don't know. As soon as I say that, they'll probably start hitting again. Now they're trying to show a lot of stock for sale. And there's a 2.5 cent almost spread right now in the bid and the ask, almost. That's pretty wide. But you're right. It's easy for them when there is no buying. Except, Clay, I think you're noticing they're not driving it down. You're right. They can show it in the red. There's no question about that. But the bid now is 27.15. A week ago, the bid was under 25 cents. It's always showing red. Yes, it's always showing red, but that's up. That's up 10%. And somehow, like you say, it's easy to keep showing it in the red. But basically, bid to bid, it's up over 10% in a week, which is not bad. It's not like we were used to in all these other stocks, but it's not bad. Oh, now you're mad at me. William, you've done it. You really pissed me off. I'm not treating RT like GTII. I wasn't saying that you were, but I was getting worked up. I can't prove it to you, but I had that exact conversation earlier offline. So I was really talking to the broad you, and I apologize, Clay. I really wasn't talking to you specifically on that comparison. Your question did get me talking, and I am trying to talk to you, but I was not saying that you are treating it like GTI. I'm trying to get everybody to think this way. So my words, of course, are inexact. I apologize for that. Quit that. Keep it up. You're going to run your followers off. Yeah, I've already done that quite a bit. I don't want to run people off, and I hope if I have run people off, they don't sell the stock. It's not about me. It really isn't about me. It's about the stock. And once other analysts pick up the stock, people won't need me at all. But Clay, I really wasn't trying to say that you were treating it like GTII. Because it wasn't your question. It wasn't your question. It's a conversation I had with somebody else today. And I think it applies to everybody in the stock. So I guess I can't get it right. All right, let me see. I can see you made some more comments, so have to give you a chance to get mad at me. I'm not selling unless the story completely breaks down. Perfect. That's perfect. Clay, you're always misjudging me. Actually, maybe early on I did, but I actually am not. I think you have, I can't get my list. But I actually don't misjudge you because I don't think I misjudge you because you've shown tremendous, of course I won't be able to find it while I'm trying to prove my point, but you've shown tremendous courage and steadfastness and a willingness to take advantage of what these criminals are doing. Yeah, of course I can't find it. But I think you have a position over 200,000 shares. I have it on a spreadsheet, but it's inside of that computer. Here, you have at least 275,000 shares. I don't misjudge you at all. That is an accomplishment, and that's a real statement that you've studied it and you're acting, and it shows that you know what you're doing as far as I can tell. So my bad choice of words, I was not, yes, I was answering your question, but the idea that you treat it like GTII, I think I said that, I should have said if an investor treats it like that. It's to everybody out there. The biggest risk I see here, Clay, is the traders and the charm boys are going to get people to treat this just like another one of the stocks. And then you'll be out of this standing at the bus station waiting for the next bus, and the next bus will come and break down, and the other bus is up on the superhighway. But I used you again. I'm not talking. All right, I'm going to just shut up about it because I keep using you incorrectly. I just can't get out of the hole I dug. But I wasn't trying to misjudge you. In fact, I see you differently than you think I do. But I understand why you think I see you wrong. Unknown stunts, man. Steve, pump up the volume. Love that song. Pump up the volume. We got to get up before we can get down. Was that James Brown? Or was it the Commodes? Was it the Commodores? We got to get up before we can get down. Clay bought 90 more, yay. See, I didn't judge you wrong. That's great, Clay. Of course, I think that means you have 275.90, but I could be wrong. I got to check my spreadsheet. So, but I'll add 90 to it. There, see, Clay, that's right. He's right. Steve's right. I was talking to Steve. It was Steve I was talking to. He's given me the business too. Once bitten, twice shy. Yeah, that's who I was talking to earlier. So I made an inelegant swap to something that's been on my mind since I spoke to Steve earlier. Hey, Jason Harbison. Welcome. And then Eric Belanger added 264 of cash cows. That's great. I love it. What you added and what Clay added today, that's the most impressive because you just keep adding a bit. But this is great. Steve added 3,000. Chess King added almost 4,000. It's awesome. It's awesome. Ward Richardson. Good afternoon, William and RT crew. 2023-24, the AI industry was moving fast. 2025, AI accelerated. What I have experienced in the first 5 weeks of 2026, we are now at Mach 1. All I can say is we got to get up before we can get down. All I can say, Ward Richardson says, is stock up on cash cows. Take your protein pill, put your helmet on. We're going for a hell of a ride. You're a good man, Clay. I accept your apology. Maybe I overreacted. Let's forget about it. Deal. I'm not sure you overreacted because you're not the only person that gets mad at me. So there's probably something wrong with me. But all I can tell you is my intention. That's all. Let me show you what I had prepared for today. Some of it comes from Ward, I think. And I wonder, I can't, the first part might be me. I don't know. We'll find out. This is my question. So here we go. Hyperscalers like Amazon, Google, Meta, and Microsoft are ramping AI capex to over $600 billion. $600 billion collectively in 2026, driven both by profit potential in AI platforms and competitive pressures to build infrastructure first. This spending, I asked, this spending exceeds historical benchmarks like the Manhattan Project, which was less than 0.5% of GDP, the Apollo spending, which was a little more than 0.5% of GDP, and broadband rollout, which was over 1% of GDP, reaching about almost 2% to almost 5% of GDP when including tech equipment. This is a monster allocation of the nation's resources. So what are the motivations? CapEx. AI investments fund multi-gigawatt data centers for superintelligence and customer demand in cloud AI networks with expectations of long-term revenue growth justifying the spend. So the $600 billion is being spent because they expect more revenue in the long run. However, hyperscalers face shrinking free cash flow and rising debt. Already up to 10 billion last year. Signaling fear of falling behind as a motivation, signaling fear of falling behind in the AI race, where compute leadership determines winners. See the top of the paragraph? It's talking about motivations. Momentum appears unstoppable, as halting the spending risks competitive failure amid the obvious risk of an overbuild. Although some people argue that it's not going to be overbuilt. Who knows? So I asked about Apple. Apple has entered AI data centers modestly, just $1 billion NVIDIA or after Siri delays. Focusing on-device AI, I've talked to you about that, for its billion users rather than hyperscaler CapEx. In other words, Apple is putting the GPUs in your phones and in your iPads instead of at the data center. So they're not spending money on hyperscaling. If hyperscalers to stumble on monetization, Apple's ecosystem and lower spend could position Apple as a winner via developer-driven apps. It's possible, but I also wondered if Apple would go gobble up a hyperscaler. Anyway, all right, so government. I asked about government bailouts. No federal bailout for AI firms is expected. White House and lawmakers like AOC, see how powerful she is? Reject it, viewing multiple players as sufficient backups if one fails. I would submit to you there's a possibility that the Fed and the government flood our banking system with money and create collateral by bailing out the hyperscalers, but we'll see. So then I asked, is there going to be a consolidation of these big boys and girls? Mag 7 consolidation. Antitrust scrutiny persists, but 2026's America First policy may ease mega deals for AI supremacy. In other words, may ease scrutiny, enabling mergers among the MAGA 7 plus, for example, Oracle. But there's no specific consolidations announced yet. I bet you see some mergers. So product pricing, AI data center outputs like subscriptions, I asked about subscriptions, use hybrid models, usage-based, tiered for profitability, not necessarily free. But my question was, do the hyperscalers need to keep the cost nearly free to generate the revenue and users? Kind of like the coal industry, the electric industry. Though penetration pricing aids adoption, they call it penetration pricing. It aids adoption. Rising demand spreads costs, potentially lowering the cost per user. What are user trends? Over half of users see AI replacing traditional search soon, with 45% preferring AI's speed and clarity. No widespread return to simple search is expected. That was my question. Are we going to go back to just simple Yahoo search, simple AOL search? No widespread return to simple search expected. So I asked about Railtown's AI role. I tried to do it all in one question to get the pro service, but they told me your time's up. Anyway, Railtown's Rail Engine, real-time event ingestion, Railtrack's ADK, and Conductor form an end-to-end platform for scalable AI agents on sovereign compute. Competitors like UnitQ, that's Susie Q's sister, ZenHub, and Wadev focus on narrower tools, such as bugs, I don't know what PM is, and analytics. None of the competitors, none match Railtown's integrated real-time edge agent stack. None match Railtown's platform. It is possible. One of the key theses, one of the key tenets of my thesis is that Railtown is better, and it may just turn out to be true. None match Railtown's integrated real-time agent stack. Rail Engine, Railtracks, and Conductor form an end-to-end platform for scalable AI agents on sovereign compute. None match Railtown's integrated real-time agent stack. And then I asked about Canada. Canada's $700 million sovereign AI compute strategy leverages energy and land for domestic infrastructure, aiding Railtown's TELUS proof of concept and sovereign developments. This moat, this barrier to entry, this hindrance to competition, this moat boosts Railtown's appeal for hyperscalers needing efficient, compliant tools to maximize CapEx return on investment. These are two paragraphs that are extremely powerful, even if somehow my questioning caused a little color on the answer. These are powerful. Acquisition urgency. In this frenzy, platforms like Railtown's become critical for productivity, becoming potentially must-buys to accelerate wins, though no deals are reported yet. Buying such enablers like Railtown saves time amid unstoppable spend. These three paragraphs sum up the case for owning Railtown. Oracle, now the answers are not pro anymore. Oracle plans to spend $50 billion in CapEx for fiscal 2026, ending in May, to expand AI infrastructure primarily for Oracle Cloud infrastructure, OCI, data centers supporting customers like OpenAI, Meta, and NVIDIA. This marks a sharp increase from prior guidance at $35 billion, driven by a $523 billion backlog in contracted revenue. That's huge. So on the one hand, you can argue that it's circular spending, and it might be, but look at that backlog they have. $500 billion in revenue backlog contracted for, so they have to perform. Funding strategy, Oracle aims to raise $50 billion by selling bonds led by Goldman Sachs and equity in 26 amid rising debt of over 124 billion and negative free cash flow from heavy equipment spends. Leases had 248 billion in long-term data center commitments. Wow. So they have 500 billion coming in, but they've pretty much allocated it. So in this fulcrum, at this point in time, that's pretty leveraged. Long-term outlook, analysts expect cumulative capex for Oracle to be $356 billion through the end of the decade for 10 gigawatts plus AI compute capacity, positioning Oracle as a hyperscaler contender. I could have been a contender, despite leverage risks. So I was right. This aligns with the broader 600 billion in hyperscaler AI spend frenzy discussed previously. Approximately 75% of hyperscaler capex in 2026 targets AI infrastructure, with the remaining 25% supporting traditional cloud and other operations. And frankly, I don't know which side of that percentage Railtown falls in, but they're both big numbers. This split reflects surging AI workloads like GPU clusters for large language models, outpacing legacy cloud growth amid capacity constraints. Top hyperscalers, Amazon, Microsoft, Google, Meta, and Oracle, allocate the bulk to AI-specific data centers, with non-AI covering general compute and storage. AI's share has risen from 14% of data center power 2 years ago to almost 30% by next year, driving CapEx dominance as traditional cloud drops to 50%. This aligns with the $60 billion total spend, where AI enables competitive edge despite profitability lags. So spending, the way I interpret this, spending on things like Railtown enables an edge competitively, even though the profitability overall on a macro level is lagging. You want to beat your competitors. NVIDIA and server makers like Dell and Supermicrocomputer are major beneficiaries of hyperscaler AI capex, capturing the bulk of spending on GPUs and optimized servers. That's NVIDIA, Dell, and Supermicrocomputer. NVIDIA dominates as the primary GPU supplier, the GPU pusher, with hyperscalers buying billions in H100, Blackwell, and Rubin chips for AI training and inference. NVIDIA's pricing power and allocation control squeeze thin server margins, but drive NVIDIA's revenue surge. So CapEx at a hyperscaler lifts NVIDIA stock. Dell benefits. Dell ships AI optimized servers, PowerEdge, NVIDIA GPUs, to hyperscalers, neoclouds like CoreWeave and XAI, and enterprises, hitting $10 billion last year in sales, despite mid-single-digit margins. Dell leads Tier 2 market share because of strong relationships. SMCI, super microcomputer, SMCI excels in rapid deployment of liquid-cooled rack-scale servers, targeting $36 billion in revenue this year with 20% margins on Blackwell orders, and it has a big backlog. SMCI's agility outpaces Dell HPE for neoclouds. Overall impact. This $600 billion CapEx flow, 75% AI focus, fuels their growth amid supply constraints. Though server makers face NVIDIA's leverage and they face cash crunches from upfront chip buys. Last page from me. Microsoft's AI-focused CapEx forms a significant slice of the $600 billion hyperscaler total for 2026. That's $600 billion this year. Microsoft's spending is estimated at 120 to 150 billion annually, based on recent surges and guidance. In Q2 26, which ended at the end of last year, Microsoft spent $37.5 billion on CapEx, up 65% year over year, with half of it on AI servers and GPUs for Azure data centers amid OpenAI commitments. I would argue if you're spending that much money, you want it to run the best, and that might mean Railtown. We're going to find that out. First half of full year 26 totaled $72.4 billion, signaling a full year pace of over $140 billion CapEx, mostly AI driven. This positions Microsoft at 20 to 25% of the $602 billion hyperscaler pool, Amazon, Google, Meta, Microsoft, Oracle, aligning with its Azure growth and plans to boost AI capacity by 80% by next year. About 75% of Microsoft's spend targets AI versus traditional cloud. This mirrors industry trends. I don't know if you're not blown away by that. I don't know. You're unimpressible. You are unimpressible. All right, I'm going to send you 3 headlines that Ward sent me. I didn't print out the whole stories. Railtown is now $27.15 in the red. The bid is $26.92. All of a sudden, the volume is 113,000 shares. The last trades, 2,000 shares at $27.15, 8,000 shares at $27.15, 5,000 shares at $27.50, 5,000 shares at $27.50, and 2,500 at $27.48. And that's as far back as I can go. But going a little bit to Clay's earlier observation, it does seem like it's possible they're having a hard time keeping it down, because this is almost 100,000 shares in a leap in volume, not quite 95,000. at the end of the day. They're keeping the price down, which also goes to his point that since a lot of us aren't buying, they're able to manipulate the red. But his other point that they're having a hard time keeping it down is my point. The bid is $26.92. The ask now is $29.1. Let's see how it goes in 3 minutes. And while we wait for that, let me go through Ward's headlines. Anthropic unveils AI model Claude Opus 4.6 as OpenAI rivalry heats up. Cloud's CoWorks debut signals start of enterprise automation. That's a huge headline. Enterprise automation. AI firms help patients by making diagnostics faster and cheaper. Anthropic unveils latest AI model as OpenAI rivalry intensifies. 2 minutes to go. Still 113,000 shares. Last trade, 27.15. Claude or Claude or Claude CoWorks debuts signals start of enterprise automation. And this Claude CoWork, an agentic AI from Anthropic, may change how enterprises use software and cloud services. Some executives believe it will not disrupt Indian IT or SaaS immediately, while others warn it could challenge firms relying on low-end outsourcing. Very, very cheap. Companies must innovate and keep pace with AI developments to stay relevant. That's the headline. I didn't deep diver. 1 minute to go. The volume is 113,530. The bid is 26.92. The ask is 29.1. That poor guy that couldn't get his stock off at 70 cents is still trying to sell it. 55,000 shares at 29.1. It's all fraud by Claude. Anthropic unveils latest AI model as OpenAI rivalry intensifies. Anthropic on Thursday released its latest high-performing artificial intelligence model, escalating its challenge to OpenAI and to Google in intensifying the AI race. Anthropic says its latest model, Claude Opus 4.6, represents a fundamental shift in how AI handles complex workplace tasks. And man, if it's real time, it needs Roadhouse. All right, Railtown closed at 27.15, 113,530 shares. The bid is 26.92. The ask is 38.308. And there was no last minute trade. What frontier? The next big enterprise bet from OpenAI. OpenAI is launching a new service called Frontier. But you have to pay to use the lavatory. And if you want peanuts, you have to pay. And if you want to bring luggage, you got to pay. This platform will help companies create and manage artificial intelligence agents. Why wouldn't they buy Railtown? These AI tools can perform specific tasks. This puts OpenAI in direct competition with Anthropic. Both companies are also preparing for public offerings and will run competing advertisements during the Super Bowl. Oh, I forgot about that. So one of them might buy Railtown. It's easier to buy than to start from scratch. All right, let me see. Let me see what else is here. It's not too much more. You do not have to listen to me too much longer. This is from Ward. It looks like Railtown, they posted at 28 cents on the close, which is interesting. Up 0.0108. Finger, well now it shows 0.2715. That's interesting. I wonder why that happened. Finger closed or is trading right now at 114, down a little bit. GDC is up 7 cents at 362, because remember, they're imitating the crypto treasury model of Michael Saylor. MTEN down a penny at 167. ZJYL up a third of a penny at 14.28. And the volume in Canada closed 245,436. All right. Oh, I already did it. Oh, gosh. See, my brain, I have a Biden brain. All right. No public authoritative sources count up how many sovereign data centers are out there. But what you do know, at least one facility is clearly and explicitly branded and operated as a fully sovereign AI site. Guess what? You've heard about it. TELUS's Sovereign AI Factory in Rimouski, Quebec. It is live, it is serving customers, and it is controlled and operated entirely within Canada. Another one of the tenets of my argument is it may be live, but you ain't seen nothing yet. So let's find out if I'm right. Multiple countries, South Korea, Europe, the UAE, Canada, are investing heavily in what NVIDIA, HPE, and others describe as sovereign AI infrastructure, sovereign clouds, or sovereign AI factories. But most announcements focus on projects, GPU counts, or national programs rather than a clean, enumerated list of already operational data centers. Even industry overviews of AI-ready data center builds this year talk about hyperscale and national AI infrastructure, but do not talk about live sovereign AI facilities. I think there might only be one. They don't break it out discreetly. Prior work we have done together, that's with Ward, show that many countries are building or piloting sovereign AI centers, but there's no credible source which supports the claim that there are exactly 4 or any other specific number worldwide. I guess he's going to get the 4 because TELUS is going to have 4 data centers. They only have 1 built out. And another is supposed to come online, I think, this month. No comprehensive authoritative global list exists. Sovereign AI factories prioritize national data control and AI workloads. often built by telcos or governments with NVIDIA technology, but public info focuses on announcements, pilots, or plans rather than a verified inventory of live sites. So here's the confirmed operational ones. One is in Canada, Sovereign AI Factory, Rimouski, Quebec, TELUS with NVIDIA and HPE, opened September 2025. Can you imagine a world where since September they've been testing the NVIDIA chips, the HPE, the stacks, the language models, and now maybe you're testing Rail Engine because it's ready? Could you imagine that it is operational since launch, but there might be a bigger launch arriving, aborting? Can you imagine that? Maybe. Serving healthcare, enterprise data, and it's all under Canadian control. Germany has an industrial AI cloud, Deutsche Telekom with NVIDIA. Show me your papers. Officially launched February 3rd this year. First AI factory for industry. Up to 10,000 GPUs. Enterprise access now. Others with strong sovereign AI claims but unclear full operational status. Switzerland. Swisscom sovereign AI factory on NVIDIA announces for AI services. South Korea with NVIDIA. The UAE, G42 clusters for Falcon models, advanced sovereign AI hubs, operational for national use. Why an exact number is not available? Sovereign AI data centers is defined differently around the world. Many deployments are partially public, but do not disclose how many distinct sovereign facilities are live or under construction. There is no global registry. If you want, we can instead build a working list country by country, which we just saw. We just saw that. And this is the rest of the list. South Korea, NVIDIA. UAE, Falcon. France, UK, Italy, and Spain, all NVIDIA. Claro. China operates extensive domestic AI infrastructure built for self-reliance, but details are opaque and not always labeled sovereign. Most projects, India, Japan, Sweden, but why, are in development or testing, not confirmed production as of today. For real-time updates, check NVIDIA or telco sites directly. All right, I think I'll leave that to someone else. I'm not checking directly, if you don't mind. If you don't mind. All right, let me persevere, endeavor to persevere. Let me endeavor to persevere. Clay says, I think we're getting a little frazzled. I started buying at 62 cents. It's been difficult. There you go. I agree with you. It is frustrating. But now I am talking to you. I'm trying to imprint in people's subconscious a message of don't sell just because it went green. That's what I'm trying to do. Our enemy, they're counting on that. They're counting on a relief sale. And I wish I had done it with GTII and Finger and CRTD. Never got a chance with Logic. Never even gave a chance for that. So the, whatever you want to call it, the instinct or the muscle memory, the emotional electricity, it does send an accurate signal to us if we're in those crap stocks. I'm just really trying to say that Railtown shouldn't be 26 cents. It should not be 28 cents. It's just the wrong price. And so when that's my opinion, that's my thesis. When it gets to $5, give or take 4, 5, 6, 7, I think that will be the correct price when compared to comps. Doesn't mean it's going to go up and stay. It's going to be volatile probably. But it's going to be from that point when others, not you or others, but others come in at $5 or $6, they're buying it for their projections of where it should be. Like the investors in Langchain at 1.25 billion. They're not buying it because they think it's going to go to 1.5 billion or it's going to go back down to 900 million. They're buying it because they think it's going to go to 10 or 20 billion in or higher in I don't know, in the maw of Microsoft. So anyway, I understand the frazzled, and you've seen it in me. I've been frazzled. I think I was frazzled massively in December. A lot of tension. I wasn't sleeping. I couldn't figure out what was going on. I didn't know how to, and I still don't know how to handle one situation. So my frazzle might be different, but I'm certainly frazzled. And I've made some mistakes in my frazzlement. But and I can't assure you, Clay, that I'm anywhere near being unfrazzled. Wow, look at that. Look at that. Bravo. See, that's exactly what you should be doing. Even though your gut, and even though you're frazzled or your gut is clenching, maybe, you took your cost average from 62 cents down to 40 cents, if I'm reading this correctly, and you're not done. So at 40 cents, yes, obviously the stock is cheaper right now at 28 or whatever they're going to say it closed at. But I don't know if I can show you this chart. I don't know. Yeah, it's kind of a crappy chart, but I think it broke out of this bullish trend, but it kind of did a head fake, and that I'm not a technician. Maybe by going sideways for so long, it watered down the effect. And this is in Canada anyway. This is in Canada anyway. Let me see if I can find a chart for, yeah, this one is the US. So it broke out and they've brought it, this is actually clearer. It broke out of this bullish pattern, popped up, and they brought it back. And it's all the computers. They hit the moving averages. But I contend, Clay, that the next time it breaks through right about here, and it's very hard to see the price, but I think it's where we are right now. This chart I made a week ago, I think we're back up here challenging the 50-day moving average. I think the next time it breaks this horizontal here at 30 cents, roughly, particularly by the bid, if the bid goes over 30 cents, I think it goes to this horizontal almost in a day. It just goes almost like, whoop, it's up here. Now, it might not go over the 200-day moving average. It might be 39 cents. Sorry, 39 cents, 39 cents. But Clay, by doing what you've done, I think you're setting yourself up to be break even much more quickly than you think. And at the risk of repeating myself, I do not see this stock as a trading stock. So I don't think you have to use your disciplines that you have from these other stocks and lighten up at the green. I think you leave the bet alone, leave the investment alone. And I think from that break even, maybe at 40 cents-ish, I don't think it'll be straight up, but maybe in the next 2 weeks to 6 weeks, at one point, it pops to the highs, 70 cents basically, pulls back, pops to 80 cents, pulls back, pops to and through $1, pulls back, pops to maybe 125, pulls back, goes to 175, $2, pulls back, goes through 2 to 250, pulls back a little bit, goes through 325, pulls back a little bit, goes through 4, pulls back a little bit, and then punctures 5. And when it's 556, it could, the next move, literally within a day or two, could be $12 because institutions might start buying at that point. So I think you've done the right, I know it requires courage, but it's the smart thing. You've averaged down, and you're going to be able to breathe better once the stock is trading back in that 44 cent to 60 cent range, high 50s. That's kind of where everybody got in and it came down. But as it trades through there, you're going to find strength in knowing that your cost basis is so low. You're going to be able to weather some of those volatilities because it's going to crab step upwards until it gets through the Merrill Lynch rule of $5. And then the bastards are going to disappear. And they may disappear before then. So that I really compliment you. That's a huge, huge performance. The only thing better would have been selling it at 62 and buying it at 40. But I think that's only clear in retrospect. I didn't do it. I didn't do it. I don't think anybody did it. But to average down is brilliant. It really is. I commend you, Clay. I really do. All right, let's see. Steve, Uncle Bill, you are dedicated. Hopefully when this is behind us soon, it'd be nice to catch a dinner, either in the swamp or in Tampa. Yeah, I'd come down to Tampa. As long as I don't fly Southwest. Just kidding. Giuseppe, can anyone here explain what Anthropic CEO said regarding AI disrupting software as a solution? Seemed to have started the sell-off this week. I don't know what he said, but I'll take a stab at it. A lot of the companies out there that base their revenue models on revenue streams from existing software as a solution, and companies that make their living providing software solutions based on SDKs, they're not going to make it. You've got to move to ADKs. And that's right in Railtown's bailiwick. That might be what he's talking about. I wonder what Constellation Software is trading for. I bet it's down. Coppin State University. Wow. Wow. Constellation Software trades for $2,434 dollars a share. And in the 5-year, it's down over 50%. And most of that's this year. Well, I don't know about most of it this year, but a lot of it over the last 6 months. Ooh. But that's what I think it means. If you're counting on revenue from existing software built with SDKs, you're going to fall behind. And you have to build your software or improve your software using ADKs. And guess what? You need orchestration frameworks. You need Rail Engine, Conductor, and Railtrex. Of course, there's other competitors that have pieces of that, like LangChain. I actually think Giuseppe, it shows how big the addressable market is. And yes, maybe it caused somewhat of a sell-off. I think the sell-off is coming in a broad sense because companies are spending their cash flows. It's like a whale investing in I don't know, finger at $10. It doesn't mean the stock's going to go up. They're putting up all this money. Their cash flows are sustaining it, but they're not seeing a return on the money they're putting up. Their commitments are high. Amazon is firing people to try to keep up, to keep its ability to spend up. I think that's the reason of the sell-off. But I don't know. Somebody else might have a better answer than I do. Steve says, nice job, Clay. Justin Babish, Apple should buy RT, put our products into their hardware. I wonder, I don't know the answer to that, and I don't know the answer to most things here, but could Railtown's tools be dispersed to the iPad and dispersed to the iPhone? Or to the person, the Apple, the Mac. I don't know. It's a good question. I would think Apple might want to buy Railtown to own that layer on data centers for the intelligence, for the spying on other people's performance. And if data centers survive as a valuable asset, but let's say there's 8 hyperscalers and 2 of them overshoot their budgets and collapse. I don't know, pick Facebook, whose spend on Meta hasn't been that successful, and maybe their network on Facebook isn't that exciting. I don't know. I don't use it But it could be a Facebook, or it could be a Microsoft. Apparently is having difficulty with its Office, but on the other hand, I think they're going to win on software. But anyway, if one or two of the hyperscalers get in trouble and Apple's sitting there and they own Railtown and they have other things, they would buy more than just Railtown. They could make an opportunistic bid to buy a company, essentially buying all the compute power of that company on the cheap, out of bankruptcy or out of near bankruptcy. That's what I think might happen with Apple in the future if the data center model proves to be an alternative. I also think Apple's strategy of putting GPUs in the user's hands makes a lot of sense too. But who knows which one is gonna or both, who knows? Constellation Software is still up $841 over the last 5 years. Over the last year, it's down 50%. With most of that happening, I guess after the CEO retired. He must have seen the writing on the wall. Michael Lachaz. Hopefully TELUS buys us with an all-stock deal after a brutal bidding war. Yeah, Michael, I think one of my favorites would be TELUS because they could bring revenue to their income statement just by doing it. And TELUS at $13, $14, to me, in the right setup, you could see it go to $100. So if TELUS paid, what did you say? Let's say TELUS paid $20 for us. I have no idea. $10, $15. And my idea that it's worth $40, $50, $60 doesn't happen in the buyout. Well, I can see TELUS's stock going up with a yield going up that high or close to it, so we could hold it. I don't know. I'm not convinced that if Microsoft buys us, that Microsoft can go up 10x from here. But I've been wrong. I've been wrong on Tesla and other stocks. So we just don't know. This AI, this transformation, they're not going back. It's going to happen. There might be some companies that financially overextend, but as a general experiment in human living, I think it's happening. Clay, am I wrong thinking that overall? Yes, you're wrong. No, I'm just kidding. Considering all your AI inquiries, my take is that Railtown stands up very positive. That's my opinion. That's my opinion. There's an argument out there that if I were correct, the stock wouldn't be down at these prices. And you gotta question, well, is that point of view correct? And in fact, Lord knows, and Ward knows, about a week ago, I sent Ward an email and just said, have I lost my mind? Is the market correct in its pricing for Railtown? And I'm wrong, is basically my question. I couldn't sleep, a very smart, very savvy tech guy has left me with the idea that A few ideas. One is I should give up on Railtown. I'm not sure that's exactly what he meant, but that's the idea that stuck in my head. Two is that uh, uh, the price is, in fact, telling you something. If there were good news, buyers would violate securities laws and be buying. And three, that I'm kind of flying blind because, clearly all that information that I thought uh, I was operating under, it was all public, but the connecting the dots kind of scuttlebutt, it was all wrong in terms of timing. And I guess finally, he's left me with this reminder and the reality and a real fear that technology moves instantaneously. And one technology can be overtaken by a misstep of the other. And that first technology, which had the whole world in their hands, can suddenly be an also ran. I can think of examples. I've given the example of I Seek You, or what's the one that lost out to MySpace, or um, what's Blockbuster. There's so many examples where delay causes a technology that's way out ahead. I mean, there's a company I raised money for that happened. It was private, so you wouldn't know the name. But the technology guy, he's just brilliant. He was on a whole different level when he started talking. Of course, once he started talking, I stopped. At some point, I just couldn't follow it. But so anyway, it was like 3 a.m. I couldn't sleep. I couldn't sleep for the rest of the night, just thinking, what the hell if I'm wrong? So I sent Ward an email, the Ward that's right here, and I don't think he'd mind. Of course, I don't think I can find it. Maybe I can. I don't think he'd mind if I read his answer to you. See, I can't get in. I don't think I can get into it. Oh. See, it's not, it's just a nightmare. I don't know why everything is a nightmare when I do it. Oh, let me just try. Okay, next. I have to use a passkey. What is a passkey? All right, I'll try it. Is that it? My mug? Talk about frazzled. It still hasn't come up. All right, maybe I can show it to you. He gave me permission to share his thoughts live, so I'm not compromising his privacy. All right, so here's what I wrote, Clay, to Ward, who's here. Ward is here. This is 6 days ago, middle of the night. I don't know when I sent it to him, but it says, maybe I can say when I sent it. No, I have no idea. So I wrote to Ward, while no one can truly know, am I being too optimistic in my Railtown ownership pitch? I can't help but see ghosts. In other words, in the middle of the night, I'm nervous about all the negatives. And it's lonely. And I wrote at the top, trying to show a little humor, which, as you know, my humor sucks. My concern is the revenue really coming from the data center as it seems clear? Is it coming quickly? Is Railtown's technology sufficiently advanced and sufficiently distinct from the competition? Will Corey sell at a low price, like $300 million, which apparently at Microsoft, a regional manager can go buy a company for 400 million without getting approval from Microsoft's board. So I just threw that out there. Will Corey sell at 300 million or at a low price? Is the whole market, the whole stock market, going to wait to see what happens for several quarters? And then I said, I have other nattering negative thoughts. And I finished by saying, I guess I'm seeking some sort of basically hand-holding. I hope you're well. So he responded kindly. And again, it's 6 days ago. I don't know exactly what time of the day, but this is Ward here with all the cash cows. He said, "Good morning, William. Are you being too optimistic? Absolutely not. Are you seeing ghosts? Absolutely not." In other words, I think he interpreted what I was saying differently. In other words, he thought I meant, are all these sugar plums I'm seeing wrong? He said, absolutely not. Revenue will come from a few directions, and yes, a lot will come. I'm trying to make it understandable as I read it out loud instead of just reading it. A lot of the revenue will come from TELUS, Microsoft, NVIDIA, and AMD. And yes, the revenue will come quickly. Is Railtown's technology sufficient and distinct from the competition? Absolutely, in all capital letters. By far ahead of the competition. This is Ward, who I get the sense he knows what he's speaking, of what he's speaking. William, personally, this is Ward. William, personally, I do not see any significant competition with Railtown at all. Other software companies have a few pieces of the puzzle. Railtown, on the other hand, has all of the pieces to the puzzle. Rail Engine was the last piece needed to complete this puzzle. And as they say, the last piece needed to create the end end-to-end software infrastructure. William, we all here are sitting on a gem. Corey has created a disruptive software infrastructure company here, William. Will Corey sell at 300 million or some low number? I highly doubt that Corey would sell at a low price tag. Corey clearly knows what he has here, William. When Corey came out with Rail Engine software, that was the icing on the cake. Any of the Mag 7 buyout, he's pointing out that he doesn't think it would require a lot of approval in Railtown, but if you sold it inexpensively, that would probably be difficult to get approved at Railtown. And then he says, William, I remembered when you asked Corey about selling Railtown for $40 billion, and you said that Corey looked at you like you were crazy. I think you struck a nerve, in my opinion. Will the market wait for quarters before someone acts or buys or does something? Or they got to see the revenue? Ward's answer is the Mag 7 certainly will not wait. And the companies that are in the know use BDO. No, he said the companies that are in the know will not wait either. My opinion, Ward's opinion, the buyout of Railtown will take place, listen to this, will take place in the first quarter. He's talking our first quarter, because it's, anyway. I would be surprised if the buyout were to drag out into the second quarter. It's a powerful statement. I tend to go with the second quarter, but I wouldn't preclude that as soon as revenue becomes clear to a Microsoft, to a NVIDIA, they know what's going on. They've got a full plate of everything else. They're in a marathon race, a sprint. They're in a sprint and a marathon. So this might be a little back burner, but if it pops up, I think they'll act. So in a Ward's opinion, and that doesn't guarantee it's going to happen, by the way, Ward's opinion is the buyout will take place in the first quarter, and he would be surprised if it were to drag out into the second quarter. A powerful statement. William, if you think buyouts were moving quickly in the last 6 months of 2025, this past month alone has been insane on buyouts, just insane. Look, there's hundreds of billions, if not trillions of capital just sitting there. A lot of people do not understand what's going on, and that's okay, which is not unique. I don't think I fully understood it when I got started. So, William, this is Ward writing to me. William, if there were 2 or 3 companies doing the exact same thing Railtown is doing, I would not be in the stock. I only invest in disruptive stocks. That's what Ward sent me. He followed up when I thanked him. I'll read it, Clay, but I highly emphasize its opinion. Just because he feels it doesn't mean it's going to happen this way. But it's exciting stuff. He said, William, you're quite welcome. I think something big has come into play with Railtown when they bought AIP, and it's big in a good way. The behavior pattern I am seeing here with Railtown is identical, or as my dad would sometimes say, identical. They used to say that in upstate New York, is identical to another disruptive company I know of. The pattern that he's referring to is that everything stays under wraps when something big is going on behind the scenes. And then there could be a major partnership or multiple partnerships in this case. I have no idea. But I trust, my sense is Ward is a technology investor. I don't know that for a fact. I personally think the buyout, listen to this. I personally think, this is Ward, I personally think the buyout is already in play here, and it has been for a while. And then, of course, time will tell. We don't know. We don't know. He doesn't know either. He's able to trust his investor instincts maybe a little more than you or I, Clay, because this is his bailiwick. He speculates in the next one, and I'll keep that to myself. But basically, he's saying that he thinks the buyout has been in the works, the merger with AIP is complete, and that all they're waiting for is when this is, he doesn't say this is my point of view. I know Talus's data center is open for business, but I think it's like opening as I've said before, opening a $10 million restaurant. You're going to have 2 or 3 weeks of a soft open just in case things screw up. And then Phyllis Richmond is going to come in for the hard open. She's going to write her review. Her plump little fingers are going to pick the appetizers and the dessert, and you sell out for the next 3 years. I think Talus's data center has not had that hard opening. Those are my words. So his hunch is that, and it makes sense, it's possible, that there's buyers in the wings for Railtown just waiting to see what happens to the ramp in revenues if and when Talus does have a hard open. And that's the hard thing to understand, Clay. And for me too. These technology players, from the investment side to the creators to the hyperscalers to the frontier companies, they get it just like this. They know what they're doing. Whether it works or not, that's a different question, but they know the game they're playing. They'll gobble it up. A guy like me or a guy like you or guys and girls here on the call, we kind of go, well, wait a minute, what does that mean? And they wait for research or wait. They're not going to wait because it is highly competitive. I think that's the theory. He also sent to me that he agrees with me, Clay, that I think it's not really a catch-up. It's LangChain's been valued by these brainiacs who've put up 125 million smackers, by the way, at $1.25 billion post-money. And I bet it's higher by now. My argument, I wrote it, I think, in one of my responses, is that I think Railtown, once there's visibility in this story, and once this, whatever this blockage is on the MNPI, the material non-public information, I think the move from 26 cents to some number, I mean, I'll give you the exact number if exactness occurs, 1.25. I think it's worth more than that now. 1.25 billion divided by 210 million shares. That's $5.95, $6. But if you assume it's worth more and it's worth 1.5 billion, it's $7.14. You know, if you assume that LangChain is now viewed as being worth 2 billion to 2.5 billion, we don't know that, but I think it's up. At the low end of that range, it's $9.52. So anyway, he agrees with me, and I'll just read what he says, but I got to make sure I don't use one of the words because I don't think YouTube will let me say it. He says, one more thing, William, I agree 100% with you on a valuation catch-up. Oh, will be severe and swift. Severe and swift. Just so that you know I'm not talking behind his back. He said, good morning, William. No need for apologies. I encourage you to put out any information we discuss here. People need to be informed. Because an informed customer is our best customer. I'm Cy Sims. That he had, that was his tagline, Sims. I don't know if they're still around, but he had a great store where you could go buy good clothes at a discount, but you had to be informed because you had to know what you were buying. All right, Clay, let me go on to Justin. All the talk we have about being acquired for positive value, not to forget the Constellation business model and the AIP setup. We can still go all the way independently. Yes, Justin, it is possible. With the kind of revenue numbers they're going to have, I would imagine they could merge with Constellation Software, or they could roll up some of the AIP companies, network companies, and bring in talent, a la the Constellation Software model. And you're absolutely right. Railtown could go it alone as a unicorn. There's no question. There's no question about that. It is possible. I think that, and this is speculation on my part, I think the buyout offer is going to lead to more than one buyout offer, and those offers are going to be so compelling that the company is going to be purchased. But you're right, they could do it on their own. There's no question about it. They could go to 40 billion, 100 billion on their own. But the thing is, if you get an offer, I'll just make it up, let's say you get an offer at, Confluence price, $11 billion. And the reason that IBM bought Confluent might be to block competition, but it might also IBM might believe they can make Confluent worth $100 billion. Well, if you use that number on a fully diluted share basis, that's $52 a share. I think it'd be really hard to turn such an offer down. I really do. But you're right, Justin. They could do it on their own. You're no question. 100,000 shares at $1,000 a share in 10 years. How many people will still be alive in 10 years? Well, a lot more of us will be alive in 10 years than we give credit. I never thought when I was younger that I suddenly would be as old as I am. And it feels sudden. When it happens, it feels sudden, even though it happens a day at a time. You will get older. You will be here in 10 years. Ward says, Giuseppe, I don't know what R1T. That headline you read is just noise. Ignore it. I see. This is good advice. Anthropic and OpenAI are at each other's throats right now. I've been watching them all week. It's just noise. I will join in on that. It's like the silver market. They put out all this fear porn, they call it. It's all just out there. They want things shooken, and it's for their own reasons. Silver will snap back up above. It'll go to 120, 150. I don't know enough about Anthropic or OpenAI if this is going to be flesh wounds or a severe wound to one of them. But I think OpenAI has the most strong negatives being put out there about them in terms of they're not making any money and they're spending all this money. And I guess NVIDIA applied they were going to put in money at a huge number, 100 billion or something, and now it's going to be just a few billion. Anyway, I just don't know. Ward would know better. Giuseppe says, thanks, Ward. I noticed software sell-off, then tried to connect the dots to rail moving forward. I don't know what Ward's going to answer to that, but what I've come down, the side I've come down on, is the fact that these big dinosaurs, these big, hippopotami and elephants who were fighting each other, the fact that they are at risk, I think it causes them to want to own Railtown's technology all the more urgently. Now, you may say that I'm just believing my own spit. I don't know. It could be a fair criticism, but I don't think so. Because if you are spending tens and hundreds of billions of dollars on compute, you would want the tools that make that compute efficient, cheaper, more powerful, and give great results to the users of your compute, even though no one uses the word compute correctly, since it isn't a word. Giuseppe says, cheers. Ryan Cohen is scouring the market for a major acquisition. Can you state the case of why that acquisition should be Railtown? I could. I don't want him to buy it. But I could make the case. Let's see. Let me take a swig. you know, there's a lot of information to give an elevator pitch, but I think Railtown with the proper financial backing could own 10%, but it could own much more than that of the annual revenue that's expected just in the next 2 or 3 years in this space of 30 billion and growing. I think Railtown has a path, and I know it sounds absurd for a 26-cent stock, but I think Railtown has a path to $1, 2, 3, $5 billion in annual recurring revenue. Now, in terms of owning the stock as we do, a lot of that might happen inside of another company, but you're asking for the pitch. If they claim 1 to 10 to 15% of the total addressable market, I mean, it's enormous. Railtown trades at less than 50 million enterprise value, mainly because it's public. It's been in a almost year-long period of a block by major material information that hasn't been disclosed. And there's no private equity group blowing smoke up its tailpipe to the investor community. But LangChain is probably the easiest comparable out there. And LangChain is not as good as Railtown. But LangChain is probably worth $1.5 to $2 billion now. Railtown's trading at 50 million. Now they're not going to be able to buy Railtown at 50 million. So the question is, if they pay 2 billion or 5 billion, what does Railtown have? Railtown is, as long as data centers exist, and there is a question about whether or not large language models are a dead end. And of course, data centers are going into space, but the data center gives you compute power, which is the totality of the data center and the stack. But Railtown is about to prove its concept on one data center because of the moat of the Canadian sovereign campaign. It's going to be one data center. It can be extrapolated to 400 Microsoft data centers. It can be just extrapolated worldwide. But the current data center, Telus's data center, is the compute power is NVIDIA and HPE. And this can scale massively, and it's an empty underutilized data center. The electricity is essentially half the cost of what you can find elsewhere. So then the next layer on that are the large language models, but this might end up being a different kind of language model. What's here now are companies like Anthropic, OpenAI, and cohere. Well, this, remember, is all in a Canadian sovereign space. I don't know, but I would guess it's going to be cohere at this level, but it could be one of the other three. So you need the massive compute power. You need the large language or language model. And of course, up here are the users. The users are small businesses, medium-sized, big businesses, development teams, individuals. The users are up here. But what is the critical thing that makes it all work is broadly called, it's called a lot of things, because I think they're coming up with the name. So broadly, this layer is orchestration frameworks or the infra software. So down here, the compute is like all the crap in your brain, in your conscious, your subconscious, what your father told you when you were 7 years old, your first girlfriend when she, all that information, what you learned in school, all the bad songs of the 90s, that's all down here. Then here at the large language model, if someone says to you, well, the lead singer of Three Dog Night died, your brain starts pulling all sorts of things. You think his name is Negron. You remember Joy to the World. You remember the ink is black and the page is white. Together we learn to read and write. You remember where you were the first concert you went to. You wonder why Three Dog Night never really made it as big as some of the other bands. Anyway, your brain is going all over the place. Well, that's kind of all sorts of neural, I guess it's neural connections, but it's not really relevant to whatever's being asked by the user. The user might be asking, why did Three Dog Night change the lyrics of the song to Jeremiah was a bulldog instead of Jeremiah was I forget what it was, preacher? Why'd they do that? So all of those things down here, you didn't need to know. It's just like your brain does. It gets all of these connections, but the question, you go, well, they thought it sounded better, or whatever the answer was. That's what this layer does. There's a bunch of information down there. The language models reduce it, I guess, and then the organization is here, basically. So what Railtown has, and you can go to their website, railengine.ai, but I caution you, if you click the Twitter link, it just goes to an empty Twitter page, and that upsets some people. I don't think it's relevant, particularly when they're in a period of suppressed news. But Railtown has three things. They have the rail. They have rail tracks ADK. And this is if you ask a question of Google or ask a question of data, it just takes the static data and gives you an answer. It's kind of like researching an existing massive data set. That's Railtrack's ADK. And when you think about it, all of the software in all of the apps since 2012, everything on your phone, everything on your computer, all the applications, all of that has to be replaced with ADK. It has to be upgraded from SDKs to ADK. That applies to the whole industry. Anyway, so they have this end of their platform. In the middle, they have Conductor. That's the observability tool. And the way it was explained to me, it's like if you have a little baby in her diapers in the living room, and she's full of fun and laughing and walking around the carpet. You're there as an adult to make sure she doesn't hit the edge of the glass table, or she doesn't go play with the electric socket, or if she's stumbling over near some extension cords, you guide her away. The Conductor makes sure that the software here uses as few tokens, units of the data center, that it doesn't get lost in endless loops, that it doesn't step on a landmine, that it doesn't blow up or collapse. That's what this is. And all of the competitors have it. My understanding is Railtown's is much better than LangChain's. And LangChain has one ADK. I guess Railtracks has more than one, but who knows? They're better. We'll find out. The reason Railtown didn't come out first was Rail Engine. And Rail Engine is the other end of their end-to-end. Rail Engine, it takes all this data, but it absorbs real-time data. And the best thing is, think of robots, think of self-driving cars, think of trading models. It takes real data and makes decisions real time. And this took 2.5 years to build. It's powerful. Nobody has it apparently. And that makes their end-to-end. So that platform on the top of one data center on a revenue sharing model, if the proof of concept succeeds, and all of Railtown's software has been built to scale rapidly, if it proves that it ramps up quickly, and it improves the user's experience meaningfully, it may be a must-have, technology to own. They have strong IP, and I guess I would sum it all up by saying you're able to bid on this company while no one really knows the story and while the proof of concept is pending, but you don't have to wait very long. I think how much does he have? $20 billion? That would buy it. And I think Railtown could be worth, inside of a Microsoft or inside of a NVIDIA, it could be worth $500 billion. I don't know if it'll do it on its own, but why not do it inside of whatever the name of his company is one of them, the AME or the GMC, whichever it was. That's what I would say. And if he's interested, I'd be glad. He's not going to want to talk to me, but I'm glad to talk to you further. Hey, Silver Skyrocket, Ward Richardson. William, as you know, there are many scenarios involved here. Whatever happens, it will be huge. Yes, I think that's right. I get a little worn out, just like anybody else, by the constantly suppressed price. We know what goes on in the junior markets, in the microcap markets. There is no enforcement of the rules. There are no research analysts. In Canada, there are. There are no trading desks. There is no buying from institutions or retail or wealth advisors. There is no oversight. Ann Wagner doesn't care about an audited trail. There's no investment banks. But there are these bird dogs that go get CEOs to sign toxic notes and other toxic financing, so the big hedge funds start shorting the stock to oblivion, so that when the company needs money, it just self-fulfills by issuing yet more toxic debt. Or if there's a merger or a series of merger, you keep selling to break up the merger, self-fulfilling. Or when the merger happens, they need money, you come in with a reverse split and more toxicity, and it's all self-fulfilling. They have a setup where, as long as a microcap needs capital on the over-the-counter, with the acceptance, with the support of your brokerage firm, the prime brokers, Congress, the regulators, the attorneys, with their support, they steal from you. It's not a little bit either. It's trillions of dollars with a T. It's very likely they don't pay taxes on those trillions. And if they have losses, for some strange reason, they can write it off against other profits they have. This is a corruption of the U.S. investment banking, brokerage banking, securities system. It started, in my judgment, by trying to imitate fractional reserve banking, and it's ended up being a slaughterhouse that works in favor of the Stevie Cohens, the Goldman Sachses, the Ken Griffins of the world. And it's not going to stop. But here with Railtown, they got in early, went public early because they needed money. They made this plan early, but it was 3 years, 4 years, 3.5 years before ChatGPT, just like a crossover song from country music goes into the pop music, and that brings the artist with it. ChatGPT brought the whole concept of AI to the front of the investment world. And luckily, because of that, Railtown didn't sign a toxic note with Jeff Easton or with Ari Rubinstein. So we kind of have a chance to invest at a cheap round because of the heaviness. But on the other hand, we don't have the negative of a big Polar Investments or another hedge fund trying to steal $200 million out of the market. So it's kind of opportunistic chance for us. I mean, just getting it to the Lang chain valuation gives you 25x. That's astonishing. It's astonishing. And I can give you reasonable scenarios that you got 10x at least ahead of that. That's 250x from here without a squeeze. I think it all comes down to visibility, knowing the story, and those who know start to use BDO. Those that know when they can start buying. But as soon as that proof of concept comes out, I don't think the hundreds of billions of dollars sitting on the sideline to invest in all manner of AI is going to wait to see what Railtown does over the next 2 years, like Tony says. I think they're going to extrapolate, and then they're going to acquire. They're going to bid, and there's going to be one winner. And the big winner is going to be everybody here. Ward Richardson, I say $10 billion for each piece of software, and I assume you're saying rail engine, rail tracks, and conductor, $30 billion. Why not? That's fewer that's less than 1% of these hyperscalers. I mean, it's fewer than, I think in Microsoft's case, I can't remember their outstanding shares or their market cap. I think their market cap was 4 trillion. So it's fewer shares than represents 1% of their market cap. They buy it at 30 billion. And I hope Ward gets them to throw in $5 a share in cash. Just kidding. That's 142 smackers a share. And Ward says that is the low end. Oh my gosh. Oh my gosh. So you guys, when it all happens, you have to thank Ward. You have to thank Ward. I think I'm gonna cut it there. It's almost 5:30 unless somebody says something. I've got a couple phone calls to make. I'm debating trying to go out. I haven't been to a restaurant in 2 weeks, but I think I'll stay in and eat some, I need to eat. So I'm going to call it there. I wish everybody the best. I'm sorry I'm such a jerk and such an asshole sometimes, but and I mean that. I'm not just saying that like it disappoints me, but maybe I make up for it by not quitting on this, not quitting on you. So anyway, I wish everybody peace. I hope we stay at peace in the Middle East. And maybe I'll come back to you this weekend, but certainly we will speak by Monday. So let's see what Ward is saying. Michelle, God bless you. Yes, God bless you. And that's a good, thank you very much. Arrivederci.